program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.
Hello and welcome to the Global View on this Wednesday. I'm Andrew Gagan. Good to have you with us again here at AusBiz. So let's check in what happened overnight. Global equity markets rallying as investors remain optimistic about a US interest rate cut in December. A raft of disappointing economic data supported the case for the Fed to lower rates when it meets early next month, and that optimism saw stocks on Wall Street advance, although there was some weakness in the tech sector which limited the Nasdaq's gains, while the Dow was boosted by healthcare stocks in particular, with Merck leading the way there. AI bellwether Nvidia extended its losses for a fifth session in a row, pulling the Philadelphia Semiconductor Index lower. Alphabet shares rose on reports Meta is in discussions to use Google's AI chips in its data centers from 2027 and rent chips from Google Cloud by next year. Softer than expected retail sales data and a Dow consumer confidence reading raised concerns over the health of the US consumer. However, shares in department store chain Kohl's and clothing retailer Abercrombie & Fitch surged after the companies hiked their annual earnings forecasts. Home Depot and Nike both advanced, while shares of Best Buy rose as it advanced its annual revenue forecast, betting on strong holiday demand for its discounted products. But Burlington stores tumbled after third quarter revenue missed estimates. And US listed shares of Alibaba slipped, even after the Chinese e-commerce firm beat quarterly revenue expectations. And cryptocurrency exchange shares Coinbase and Strategy slid in the face of ongoing Bitcoin weakness. Well, a number of US economic data releases, which had been delayed by the government shutdown, have just shown that further signs of economic weakness in the states. Retail sales in September rising just 0.2%, well short of the forecast, while producer price inflation increased slightly ahead of expectations to 2.7% year on year. And the Conference Board's measure of consumer confidence fell to a 7-month low in November, with fewer households planning to buy motor vehicles, houses and other big ticket items over the next 6 months, while house prices rose 1.3% year on year. Meanwhile, White House National Economic Council Director Kevin Hassett is reportedly seen by advisors and allies of President Trump as the frontrunner to become the next Federal Reserve Chair. And in the latest development on the plan to end the war in Ukraine, President Volodymyr Zelensky has said Ukraine is ready to advance a US-backed framework for ending the war with Russia and discuss disputed points with President Trump. In talks, he said, should include European allies, saying that framework is on the table and we're ready to move forward together with the US and the personal engagement of President Trump. Well, US Treasury yields have fallen further amid the flurry of weak economic data. The 2-year yield fell to around 3.46%, the 10-year falling below 4%. And the US dollar index was down around 0.5% on the day, the Aussie trading at 64.7 US cents. Oil prices have continued to fall on the prospect of an end to the war in Ukraine. Brent crude futures down more than 1.5% to $62 a barrel. Copper rose more than 1%. Iron ore rose 0.8% to 106 US a tonne, and gold has slipped slightly, currently trading around $4,130 an ounce. And Bitcoin has now weakened, sitting just above 87,000 US dollars. Well, let's get more on US equities with a focus on the retailers. Zach Waring is joining us from CFRA Research. Zach, welcome to AusBiz. Great to have you on the show. A number of earnings updates, of course, we've just had. Can I start, though, by asking you, we just had that latest data on retail trade, plus, of course, ongoing weakness in consumer sentiment. How's that set it up for what's ahead for the retailers?
Yeah, thanks for having me. So, you can't look too much into the data that you got today. Obviously, it was late, and I think the equities, the retail equities, kind of showed you a completely different side And so you saw the XRT up almost 5% today, along with pretty much everything in retail. I'm doing really well over the last couple of sessions.
So obviously the retail data backward looking. What about consumer sentiment? How would you describe the state of the US consumer as you head in to that important shopping period of Thanksgiving and then Christmas?
Yeah, we've had this pretty depressed consumer sentiment for, a couple of years now. It hasn't never really bounced back to the levels you saw in 2019. And I really think, that's just not showing up in retail sales or in the company outlooks for most of these retailers. So I think, the U.S. consumers being cautious, low to middle income consumers is obviously not doing as well as the higher income. But I think everything's stable here in the U.S.
Well, Zach, let's get into some of those stocks you're focused on. Abercrombie and Fitch, now as I mentioned there, its stock jumping in that session just gone. What did you make of the result, and overall, what's your analysis of the stock?
Yeah, so I have a strong buy on the company. I thought, over the last couple of months, the company's been really beaten down because of the tariffs. And they've had some, decelerating growth compared to the prior 2 years. But overall, a really healthy company with really strong brands. Valuation got extremely depressed. I think today, before earnings were released, it traded around 7.5 times forward EPS estimates. And obviously, they had a big beat and guidance raise. I think a lot of people, when the tariffs came out from the new administration, I think a lot of people really sold off the entire apparel and footwear industry. So you've got a lot of companies across the sub-industry that's, beaten down valuations. And now you're seeing a lot of that kind of snap back in the last couple of weeks as they report better than expected. And, the tariff impact is smaller than most investors thought.
Well, we'll get into a couple more apparel companies in just a moment. I wanted to move to Coles Corporation, department stores there. Likewise, its stock surging overnight. Yet I see you've got a sell rating on the stock. Why is that?
I do have a sell. I think a lot of the company's move today was probably short interest. I do think, right now shares are by no means cheap in terms of valuation, even with the updated guidance. They did have a significant beat, and it was a very good quarter compared to what, most analysts were expecting. But I do think a lot of today's move was the short interest side of shares, and I do think valuation here is extremely lofty for Kohl's.
Okay, hence the sell rating, particularly after that move in that session just gone. Zach, let's turn to Ross Stores. Tell us a little more about this and what you're seeing ahead for the company.
Yeah, so off price is a little bit different for us. We think they're operating in a perfect, environment. The middle and lower income consumers continues to be cautious and look for promotions. And that benefits the off-price retailers. They also really don't have to deal with tariffs, not nearly as much as the rest of retail, because they typically buy, older inventory from other U.S. consumers or inventory that's already in the U.S. So they're kind of operating in a perfect environment. I do think valuations here are a little stretched. You've got TJ Maxx and Ross Stores, both trading well above historical averages, and I think rightfully so. But we definitely would caution here to jumping into shares at these levels.
Okay, so you've got a hold rating therefore on the stock. Let's now take a look at Gap in apparel. You're talking about this before and the effect, I guess, tariffs in particular on the apparel retailers. What are you seeing for Gap at the moment?
Yeah, so Gap is another company that's doing really well. They've got obviously multiple brands, and most of their brands outside of Athleta are performing extremely well. They had comp store sales at Gap and Old Navy up 6 and 7%, and that's extremely well. That's been multiple years in the makings for those two brands. They have been really beaten down over since COVID, and then the last couple of quarters have really done a good job of turning those brands around, which are their biggest brands. And valuation's pretty cheap there. So we really like that company. We think they've got some room for margin expansion over the next couple of months and quarters, and we like the name.
So Zach, if just in terms of the outlook then for retail, if it transpires that the Fed does cut rates again early next month, what sort of a tailwind is that likely to provide the overall sector, do you think?
Yeah, I think it does. It doesn't really affect apparel and footwear in terms of, interest rates aren't directly impacting that sub industry. I do think that it will, drive consumers to start spending more, though. I think just the U.S. consumer typically spends more when they think things are going to improve in the future, and I think if you're lowering interest rates is a part of that. So I think they would benefit a little bit from that tailwind.
Zach, great to get your research. Thanks for joining us from CFR Research.
Thanks for having me.
Zach Waring there from CFRA. All right, let's turn to the local market then, and we are expecting a very strong opening there. SPI futures up 1%. That is reflecting what we saw on global markets overnight, with most markets rallying. Now we're going to get across a number of results, also with a focus on the retailers locally too, and also a number of companies holding AGMs. We're going to get across all of that in just a couple of minutes. Stay with us.
This program is brought to you by LGT Wealth Management. Welcome to the next chapter in Trusted Advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.